Welcome to our webinar. My name is Doug Duty, and our producer Derek is also helping facilitate the technology. Appreciate his help. If the technology cooperates, we plan to send you all the deck with an audio recording after we're done. Lately, we've been asking our customers, what's on your minds? What are you thinking about? Some of the answers that ranked highest were, I'm approaching a challenging market in 2021. How do I do more with less budget? And how can I make sure the value I'm driving in leads is truly of the highest quality? We're going to share with you today what we're seeing, but we also realize there's so much more to say. So we're going to be as concise as we can. Please know what we share with you we really believe, but we also suspect there's lots of things to learn from other people. We just want to continue doing what we can to help you. So, we're going to try to limit our comments to about 20 minutes, but we'd like to leave as much time for QA as possible. Please feel free to submit a question if you have one, and we'll make time to address as many as we can at the end. Let's dive right in. Eric Meerschaert is our Executive Director of Strategy. His background includes SVP of Global Marketing for a billion-dollar software company and an engagement manager at McKinsey. What may be most relevant for our discussion today is, during the 2008 financial crisis, Eric served as president of a large software firm where he successfully worked with and led his team to beat their revenue goals during the recession. I know he's glad to be here and open to share any of his experience and knowledge, and we hope that some of this may help all of you. Eric?
Doug, thank you. I'm looking forward to having our conversation today. I'm sharing something, this idea of market takedowns, that we did well in 2008 and 2009, but I believe if I knew this back then, we could have done even better. This idea can sound like the same thing you're doing today. So I want to encourage you to listen for how it's different, and if you don't, ask questions, because in this, the subtleties of the difference here is an enormous amount of value over the near term and even the longer term for your company and your efforts. So with that, I want to jump into market takedowns. We're going to be talking about really three things. Number one, it's a really challenging time. And yeah, it's not just about COVID, it is, but we're at a unique time of the year. Talk about that a little bit. And then we'll go on and talk about market takedowns themselves. What are they? What are some examples? And why would we do them? And then we'll share some next steps. So I'm going to jump right in. It is challenging times for most marketers. First of all, we're under pressure to produce pipeline for the first half of the year and through the rest of the year, but here we are and it's October. And for most of us as marketers, we know if we launch something now, we've lost a week in November, we've lost a couple of weeks in December, and leads start to arrive in January. And we're already worried that the pipeline is healthy enough to help as fast as possible. There could be a 6-month sales cycle. It's a tough time of year. And there's a lot of pressure on our colleagues in sales, and they need and want help. And that makes this really challenging at this time of the year. Beyond that, we're likely facing tighter budgets than we've faced in recent history. Probably you've experienced some ratcheting down, maybe twice now in this year. But also, many people are talking about reduced budgets for next year in the first half, and we're peering at that market and really wondering, what is it going to be like? At the same time, we're doing annual plans. If you're a larger company and you're publicly held, you've already probably had to provide numbers, and it's time now to take those numbers and make them real and tighten up the commitments for the first half of the year. If you're a smaller company, you may be looking at your annual plan and wondering, how do I drive the best benefits? When and if the market gets healthy at the latter half of the year, am I laying in the steps to take aggressive steps forward and rise into perhaps some strengths in the economy? So it's a really challenging time of the year. And it's just the right time to think a little bit more about market takedowns, and I want to cover why. Market takedowns, here's the first thing, they create greater focus. And over on the left, you'll see some interesting quotes. Certainly, Most of us on the call aren't like the chairman and CEO of Pepsi. But I think it's interesting that even the chairman and CEO of Pepsi was recently quoted as saying, by creating one operating sector, we believe we can enhance our focus on accelerating top-line revenue growth. Really? Pepsi? And then down lower on the left, we see a quote from a small business journal that's talking about 9 strategies to grow. And one of the prominent strategies is you can grow your business by being very focused on a single niche. And this becomes your opportunity to be a big fish in a small pond. Why? Because with scarce dollars, focusing marketing and sales, perhaps other parts of the organization, concentrates budget, management time, and therefore your impact in the marketplace. But the question is, how do we do that? And what moves do I make now so that over the long term, we have a better chance of maximizing our return on investment and we create some real results? Well, market takedowns help with this in 3 ways. First, they sharpen our focus on critical beachheads, and I'll unpack that word a little bit, but it's a hyper-focused way from which you spring forward. Secondly, they argue for pilots that allow us to learn in one area and then expand rather than trying to learn everywhere. And then lastly, they cause us to create very more specific offers of value that in fact should be designed to connect emotionally so they can stand out right now. So let's unpack each of those 3 things. Number 1, what is this term, beachheads? Beachheads technically are a war term, and we are fighting in a war, but it's from a small border area that becomes a stronghold from which we can advance into enemy territory. And of course, we all, or most of us, think about Normandy when you think about a beachhead because it's literally a beach. But this idea can be applied to marketing, and it's in fact the idea that Geoffrey Moore, in his book Crossing the Chasm, really starts with. But it's not a beachhead unless you can own a substantial part of it. It's large enough for you to build strength, and it gives you a place from which you can spring forward quickly. I want to give you one example and start with Oracle. Oracle has become the market-leading ERP solution in pharmaceuticals. Now, how did they do that? You'd think they would go target big companies because they were a big software company. But Larry Ellison and his team did something really smart. They targeted startups mid-stage in drug trial. Now, why? Because a startup mid-stage that has success needs an ERP. And in fact, the investors and the board wants that operating division to be ready to grow because we know what happens when you have a good drug. You hit the market and then you really accelerate. So you have to have your infrastructure set up or you'll fail to effectively serve the market and capture the revenue. So he believed that if I can be in more of those companies, 1 in 10 are going to grow substantially, and over time, I'm going to be present in some very large companies. And if you were walking through airports back when this happened in the 2000 timeframe through 2004, you will remember that Larry posted signs and it said 4 out of the top 10 pharmaceutical companies use Oracle. Months later, it was 6 out of the top 10. Another quarter later, it was 8 out of the top 10. And then we watched it move a little more slowly, but one day he announced that he led the pharmaceutical market because 10 out of the top 10 pharmaceutical companies used Oracle. Now, if you think about that, it was a hyper-focus on a narrow beachhead. And he took a risk, but that risk really paid off. So the idea of beachheads and how do they work a little bit more, they're sort of done like throwing a strike, and forgive me for the mixed metaphor, it's Larry's. But the idea is we take a marketing focus and we strike at a couple of markets, but we do it very intelligently. The focus of the market is related to other things, so we easily create momentum. And we want to hit a couple of markets, we'll talk about how in a second, so that we can knock over lots of other pins. And we create a lot of leverage by doing that. Now, this is a really critical difference from what we often do. So what we often do is we start with a budget and we say, I've got a team of product or industry marketers. I've got a budget, it's gone down 20%. I'm going to give some people a little more, some people a little less, and let's go. Instead, this argues for thinking about a couple of markets very carefully, really strategically planning those moves. So once you hit a market, it'll knock over other markets more quickly. So what's a market? It's not an industry for sure. A market is a group of buyers, okay, people with common needs and buying characteristics. So you have to move from manufacturing to something like, as an example, US high-tech manufacturing, 50 to 250 million. But that's not even yet a market, right? Because it's not buyers, it's a vertical. So we have to move from that market into, maybe as an example, plant managers in that sector. But still, we have not narrowed it down to common needs and buying characteristics. And it really isn't yet a beachhead, is it? Because it's a pretty broadly defined thing. So we move from plant managers in that sector to plant managers who, and you fill in that phrase, but it's literally plant managers who have specific characteristics and buying needs, and we'll talk about that a little bit more, and it's a beachhead. It's a place I can own. If I think about this place out 2 or 3 years, I can go get a measurable share. And that's different from saying, I want to grow market revenue by 15%. Good objective. But a beachhead says, I want 10 to 20% of that narrowly defined market, maybe more. And so I want to talk to you about an example. We're working with a client now. I'm not going to reveal the name. They are obviously in the healthcare marketplace from this example you see on the left. But what we did with the client, and they played a substantial role in this, is they chose a market, emergency management services, which was related, if we do well in that market, to hospital emergency departments, which is related from the hospital emergency departments to post-acute care. You see how that worked? And we're going after a big share of that market. Over time, we want to go capture 60% or more of that, of a certain share of that market, which will feel like sort of 20 to 30% of that total market space. That's a big share, and we've got a plan to get there. Now, when we start momentum in the emergency management services market, the hospitals are going to pay attention because it's related. And we can move right into that market by reference and referral and demonstrated value. And when we make progress on the hospitals, see, many people want to get out of the hospital right away, and so does the healthcare system want that to happen. And so they go to post-acute care, and they have to be transitioned to post-acute care, which is related to emergency management services and the hospitals where they start. You see the relationship? And each of those markets are small enough that I can not only grow, but if I can own a substantial share, and I can spring forward from it. And that's one of the things that makes this really unique. The next thing we have to think about as we're doing this is we don't want 8, 10, 12, 15 markets to comprise our growth in this takedown strategy. We want to nail our first market so it's going after sort of 40% of a 3-year number we're targeting. We're going to start it first and start the next market later. Notice we're not starting them all at the same time. And it's going to naturally not get to anything more than like 25% or some number like that. And then the third targeted market might only comprise 15% of that 3-year number because of where it starts. The critical idea here is you're not doing everything at once, and you're using as few markets as you can to get to 80% of your revenue objective. And I'm thinking really quickly about a long time ago, J.D. Edwards. And at one point in their marketing, they were in maybe 13 countries with 65 offers, and they were spreading their marketing around like butter on warm toast. They had lost track of their manufacturing leadership position and were in multiple markets. They had gone up market, and what literally happened is they lost hold of their primary strategic advantage, mid-market manufacturing. And that decreased their overall shareholder value, increased the cost of them driving revenue, and as a result, I think eroded sort of their market position to the point where they were bought by PeopleSoft, who was bought by Oracle. All right, so this point is related, but idea number 2 is very critical with market takedowns. If you start all at once, you're going to spend a bunch of money. Instead, we refine our growth tactics to get past this false choice. The false choice is, I got a lot to do, I need pipeline, a lot of different salespeople, a lot of different industries, a lot of different products. Let's get going. And let's get going fast. We want to argue, relative to market takedowns, that start with one. Focus your team on working out the kinks. Focus your money and momentum until you really get this process down for yourself on the most important market, like the headpin, the number 1 or the number 2 market. Pick one and go after that market very hard. Create results and momentum, and then move other targeted markets into this strategy so that you can get going. This means we have to do something for those other markets, but we don't do everything for those other markets. And when we start, we're thinking about share, not just 10% revenue growth. We're laying in the offer and the focus so that when we win, we're targeting a 3-year title or target, so that we can own a substantial share. So what do I do about the other markets? I keep the lights on. What do I mean about that? A lot of what you're doing today, you keep doing. A little bit less money so that you can focus on this other market. But you do work to keep your existing strategies going. They're not probably bad or inherently wrong. You're just trying to free up money to focus it a little bit more on taking share and owning markets and getting ready for your beachheads. Okay, third idea here. There's a little bit of a process to doing this. And if you follow it, you have the greatest chance of success. The first step in driving market takedowns is to identify within that narrowly defined beachhead you've picked, not everywhere, the specific buyer, the champion's urgent moments. These aren't just pain points. They're a little bit more than that. An urgent moment is something I have to do. Now, it sounds like a pain point, right? But there's a difference. There could be a list of 20 pain points that people have right now, today, not 6 months ago, certainly not 18 months ago. An urgent moment is a high priority moment that I must address. And if you don't pick an urgent moment, you might have great ideas, great value, great messaging, but you won't be heard because the buyers aren't looking to solve that problem right now. It's 10th on the list. Right? So urgent moments, they must solve now, not just pain points. Around that pain point, you now have to fix upon it a full value story. So it's not just about, I have a product that has benefits, buy it. It's people are more skeptical now. They're voting dollars carefully. They have to, just like you as marketers, probably provide more measurable benefits quickly than they've ever had to. So they want help. If you have a value story, or there's a journey to deploying and using your product, whether it's a manufacturing instrument or a service or a piece of software or something else, you have to think about that client and that buyer and their promised return on investment and help them get there. We were working with a company just recently where we did some market research. The company thought that raising or lowering price would lead to more revenue, and we found something else entirely contrary by asking about the urgent moments. The buyers literally wanted to get to higher value. The price of the product didn't matter. But the buyers were sitting on the sidelines because they didn't know if they would get the value. And what they wanted the company to do, and this is a quote from the product line president kind of role. I wish they would just come and help me get the value, because the value is so huge that you could charge twice for your product if you actually drove the value theoretically we can get. But we need help. So you think about the whole value story. You determine how to package that value with a solution, whether it's partners or employees that you have today, looking at all the strengths you have in your organization with all the blinders and constraints off. And then you're pretty close. Now, why? If I go into the marketplace and say, you can have a higher ROI and I'll help you get there, that's great. You know, you've gotten away from features, you've gotten away from benefits. But honestly, we've learned that people need to connect emotionally. Because they're looking at the market through the lens of, I have an urgent problem. If you don't think about how to connect that return on investment to the specific emotional needs of buyers and champions, they're going to look right past your ads because it doesn't connect to their heart. They're going to look at the same pictures everybody else is using, hard hats or people in white coats you're selling hospital stuff, and they're going to think, those faces don't look like me. Those pictures look like everyone else's pictures. And in the haze of everything going on, you won't even be noticed. You'll be like everyone else in the sea of sameness. So you have to look very carefully at the specific emotional connection to those unique urgent moments, or you're going to keep talking the same way, think you have a value story, and it still won't be heard. And remember, this is for the beachhead. So if you used to sell to hospitals or used to sell to manufacturers, you're going to be picking plant managers who what? And you're going to speak to their urgent moments. You're going to know that you have a priority offer because that's the only beachhead you want. And you're going to focus and use digital activity because there's lots of great creative events. There's, earned media. There's digital online events today. There's hard print and emailing or mailing that, a dimensional piece. There's lots of different things to do, but you want micro measurement. You want to hit that beachhead and figure out what's going on immediately and adjust your tactics and pivot fast so you can take the beachhead. It's not just about revenue, good thing. It's about taking the revenue that allows you to own a substantial part of that beachhead. And to get a start, you've got to tune very quickly. And this package together, if you think about it carefully, is a uniquely focused way to take your money, focus it on a market, establish a beachhead and a direction that says, I'll be a leader in a market. I'll own a substantial share. You're a small company or startup, that means higher shareholder value. That means your VC or your funding vehicles will, when you go to sell, you'll get a higher trading ratio. If you're a large company, instead of being sort of known for everything, you'll have a clear purpose that gives your brand more awareness and gets you a higher return on investment. So as a quick review, market takedowns start with a beachhead. You cause things to trip over by finding closely related markets that give you quick brand awareness, great reference and referral, and can allow you to move forward quickly into that next market to take another beachhead. You prioritize those beachheads, not doing everything at once. You do that by focusing on the first one, and it's going to comprise, if you're successful at growing forward from it, a substantial portion of the revenue you're targeting. The next one will start later, but you're still targeting beachheads, targeting market share, and a slightly less proportion, and so on. And then lastly, by leveraging an emotional connection to their urgent points, you create better value that connects to the hearts of people and their specific objectives. And by tuning it and moving quickly through digital mechanisms to start, you're going to own that message and stand out in the sea of sameness, sort of like Eggland's Best. And who thought we were going to pay extra for eggs, right? That's a market takedown. And if you take that approach and that strategy, you'll own market share, drive higher returns on investment, do better plans, and really, we've seen this work succeed in having a brand that matters and a position that lowers the cost of marketing and sales over the long term. Okay, going forward, we're going to do a couple of things to put some meat on the bones. The first is, since we are where we're at, we thought it might be valuable to release a piece that has to do with how do I take this idea and do a better plan for 2021? Because one, market takedown, and how do I spend the money elsewhere? Eric, help me out. There's going to be a piece coming on that. So watch for that. And then secondly, we're going to talk about how you lead your team literally through this process in detail with the idea in mind of, hey, I'm in a lot of verticals. We see this. How do I do a market takedown? So I can own a substantial portion of that vertical and have better returns on investment and higher returns on marketing and sales, and a much stronger position and a purpose to own in that market. So watch for those two, and we'll help put some meat on the bones and help you get a great start on doing market takedowns. Thanks so much for your time. I hope you found this valuable, and I look forward to sharing other ideas as we move forward.
Thanks, Eric. That was a very informative webinar, and we have a lot of questions. Some of the questions and the way that they're coming in, that I'm pairing them, you also have a lot of questions about really the subtleties and the differences. The subtleties and the differences around the differences between a vertical market and an actual market target. A lot of you also had questions around this in ABM. So Eric, I'm going to start in that area. And this is a question we have from Steve. How is this different from ABM? It sounds very similar.
Actually, it's not different, it's complementary. I would say it this way. Market takedown is the best way to focus ABM and use it to gain share in a marketplace. And so what the ABM strategy would then do is focus on the individuals, the buyers, the companies in precisely that beachhead. And in that way, you're going to unlock better returns more quickly, and you're likely to reach exactly the customers you want. So it's just a powerful way to implement the takedown.
Thanks. I'm going to go a little farther into a question similar to that from Jennifer. You talked about in the beginning, it's really important to understand the subtleties and the differences. Can you cover one more time why a beachhead is different from something like a market target?
Yeah, sure. A beachhead is a market target that's very narrowly defined, so that number one, you can own a share of it. So in my example a little earlier, mid-market manufacturers, 50 to 250 million. In North America, might be could be 5,000 companies, and you might not be able in a 3-year period of time to own sort of 3,000 of those, or even 1,000 of those. So the question is, how can we narrow that market in a way that, number one, I can own a substantial share, say 20+% share. And define that narrowly, but define it in such a way, number two, that when you knock it over, like that bowling pin analogy, it knocks over into other things. And so in that way, it's just a more specific way of targeting a market. Again, whether it's vertical or horizontal or geographic.
What's one of the more credible ways, one of the more easier ways out there right now that our audience could actually find out the exact size of a market?
Wow. Exact size of the market. Listen, if you have publicly held examples, it's you can begin to you can figure that out. We can get counts in even as simple a place as associations in your targeted market typically have that kind of information available, and then also your digital team can give you information that is often much better than those sources, because it's not done through a survey. It wasn't done 18 months ago, and you can reach out through programmatic partners or other people you're working with in the digital space to find out how many touch points there are out there. So there's lots of ways to get there, and we keep coming back to this digital point. It's a powerful mechanism, not just to execute, but learn about your market.
Yeah, because there are a lot of questions about just limiting. They feel like this could be a little limiting. Why aren't you isolating vertical markets? We've had a lot of success targeting healthcare providers. That's from Lisa.
Okay. Actually, a vertical market is the start of establishing a beachhead. So healthcare is a market, but it's really a vertical of so many markets, because we have to find buyers who have common needs and buying characteristics. And on the technology side, when you're selling technology, we often use this persona word, ITDMs, IT decision makers. Well, in truth, there's lots of those. They have lots of different roles. They have lots of different buying needs. They have lots of different buying characteristics. So it's far too broad a term, and just like healthcare is. So what you want to do is pick a micro market within healthcare that you're going to use as your beachhead. You can own a share of it quickly, like in 3 years. And then you use that to relate to other little micro markets. You remember our example from emergency management services into hospital emergency departments, after the hospital into post-acute care. And we're lining up the relationships so they knock over like bowling pins in a bowling alley. And so in that way, you target it further within healthcare to own beachheads and take share.
I'm going to continue in that area about just the size of the markets and how to assess them. And I know we're going to get deeper into that in our future conversations as we extend this into other communication pieces for our audiences. This is from Mike. I'm not sure it's very realistic to select only 3 markets. I can't imagine only 3 markets with a beachhead that can get close to 80% of our revenue goal.
Yeah. Okay, well, all right. Well, that's a good question, Mike. Well, obviously, if you're IBM, the idea of how many markets you pick is different than if you're a $45 million software company. If you're a $45 million software company, pick 3 markets, find some beachheads. Even if you're very large, you may start by saying, let's look at the North American theater, or even just the United States. Let's narrow that further, and let's find out. If you're big, you've got share, hopefully. And if you're big, you've got some momentum, hopefully. And what you're going to do is you're going to say, I'm going to pick a beachhead and go own more of that share. And it's going to be very much related to another market where I can grab substantial share. And then again, back to my sort of example in JD Edwards, it sounds like I'm indicting them. Boy, I think you'd find this in a lot of software companies around the world. You'll find people who have closed a few good deals in lots of countries. And that's how we get from Europe to a territory called EMEA, which is not a market. I mean, Europe, Middle East, and Africa almost don't have common needs and buying characteristics. So, we get deal here, deal there, and pretty soon we're in a lot of countries. This idea is to stay very narrowly focused. And so you pick by theater, you pick a vertical, and you get really specific about it, and you keep the lights on everywhere else. And that's how it can make sense. You're going to take share in bigger chunks because you're bigger, but you can still use the concept.
That's a great segue to a question from Dan. Is keeping the lights on marketing like always on marketing? In other words, what do you mean keep marketing like we have when you're suggesting that we redirect budget to our beachhead markets?
Well, that's a good question.
Try to pick the best.
Keep the lights on can be like your always on programs. People use always on to refer to a part of a campaign that continues regardless of little shifts I make in technique or offer. Like, for example, I'm going to keep my awareness program running. I'm going to keep my branding elements running. And that's always there, even though I might be offering a webinar or some other piece and promoting it in a different way. So it may be that you use your always on programs as part of keeping the lights on. And you might find that you also have some good programmatic going in the marketplace or a webinar series, and you can afford to keep that while you shift some money over into your market takedown. So you're sort of backing, you define that market takedown bottom up, and we'll talk about this more in sort of a piece that we're coming out with, but you do your market takedown bottom up, and you ask yourself first, how do I fund that the right way? Then you say, what are the implications? And what do I need to sort of strip away but keep the lights on while I do that market takedown? Now, here's the good thing, so don't panic. You're picking a beachhead. And that's a small enough market that I can own a substantial share. So you're not going to be redirecting $100 million, or if you got $1 million budget, you're not redirecting $500,000. You're going to own a small beachhead. And that's why you start with that beachhead. It gives you an opportunity to get a toehold without moving all your money around.
Great. I think you answered that well. It's a question from our friend TJ. I like this one. How long do you wait to see if your beachhead approach is working or not?
I can't give you the time, TJ, but I would say this. You're going to design an integrated marketing campaign for that beachhead. And as your leads hit the rate, underneath your beachhead plan, there'll be some math. And that math will say I need a certain number of leads or sort of top funnel performance that'll translate to middle, that'll go to the bottom, that'll become a sales cycle, et cetera. And as you see yourself hitting the rate that suggests you're on the way, that's perhaps the next time to start thinking about shaping the next beachhead. And you want to make sure or try best you can to wait to do that so that you're getting share in the first beachhead you've picked, and you're not sort of spreading your money around like butter on warm toast. So you watch your metrics. That's why digital is so important. You're paying attention to the shifts. You're pushing your program to hit your numbers. And when that one's running, then you go looking towards the next beachhead because you want to fund that first one and keep it going at the rate you need. I hope that made sense.
That's why I believe, Eric, really understanding the size of the market and choosing the right beachhead is critical. And I know that's what you're going to be sharing more about in great detail in an upcoming point of view piece we're going to send to everyone that attended today. So we'll get deeper into that. I have 2 more questions, and I was going to combine them, but I think I'm going to keep them different before we wrap up because they are similar. These are obviously from people who I believe understand what you're saying and buy into it, but they're maybe struggling on how to sell it internally. So let's start with this one from Teresa. How do I sell this idea internally? Honestly, I'm concerned about starting only one market takedown, why my competitors are continuing as is.
Yeah. Well, yes, Teresa, here's sort of the first thing. If they're not doing market takedowns, don't worry. But, I'm kidding a little bit. I'm sorry. But well, there's some truth in that. Again, we're not shutting down the other markets. All we're doing is trying to free up enough money to start a really well-targeted program that'll yield higher results. And when that takes off, it's actually going to give you more money. And you're just taking little chunks. And that's why the idea of beachheads is really critical, Teresa. Now, beyond that, and that's all the math stuff, the way you form your first takedown is highly collaborative. So you're going to build maybe even tighter links than before with strategy, however that's shaped or named and titled in your company, because they're seeing that marketing isn't just producing revenue, you're going to take share. And that's something a strategist, like myself, can get very excited about. So you build a friend in strategy. The second thing is you're going to be talking with sales about enabling them in deeper ways. And sales reps, Doug will attest to this, we always like talking about something we know a lot about. It's really hard to be a generalist as a rep because you can't connect. And the great thing about beachheads and market takedowns is people become hyper-trained, hyper-focused, and so much better than their colleagues who are out running around talking to a lot of people with a lot of different needs. So, so you build friends in both directions. And then as you're working as a team to pivot quickly, remember that metaphor through digital, you actually build this belief that, hey, this wasn't just a crazy idea. We're actually making this thing work together. And those three things together will usually help you sell it and keep it sold internally.
Last question from our good friend, Steve Greenhow. And I'm going to paraphrase it a little bit. Just market takedown. It was a great 20-minute session you did, and we had some really good Q&A. Thanks everybody for the questions. But give me a elevator speech real quick. Like if I was going to tell my boss or explain what does market takedown mean, how do I do it?
We want to try market takedowns because they're going to help us focus on markets we can win, drive faster results, and improve returns on investment in sales and marketing. I want to share that idea with you. If I was a small company owned by a VC, I'd say, by the way, we do this successfully. We're going to drive higher trading ratios. And typically the management team cares about that because they have some skin in the game. And if you're a larger company, it's about brand awareness, and the analysts will pay attention because you're a market leader. So if you're in software, Gartner will pay more attention. So anyway, so that would be the elements anyway of an elevator pitch if I had a few more minutes to think about it. Yeah.
Thanks, Eric. I think you did a really great job in this first webinar. I know we'll continue to share information with everyone that attended. I tell you, everyone that's attended, we remain amazed at the interest and the amount of people that attend these webinars. So thank you so much for this. We'll keep doing these. We're intending to have them all for free just to help you as much as possible. We'll be following up over the next weeks with additional information to all of you. It'll be deeper ideas on the subject. If you find the information valuable, opt in. We'll keep sending you things. Also, feel free to contact me or contact Eric anytime you have questions or if you want to talk about this further. If you just use info@studionorth.com, your messages will reach me directly. I'll get right back to you. So if the technology cooperated, expect that we'll send you all the deck from today. We do look forward to helping you and collaborating together. That's what this is all about. Please stay safe and healthy. Thank you. Derek, you can end the webinar now. Have a great day, everybody.
So long.